Ever pondered how inflation impacts your insurance coverage? Let's break it down. Inflation is that pesky economic phenomenon that diminishes the value of your money over time. As it creeps up, your purchasing power shrinks, meaning you pay more for the same goods and services. Now, apply this to insurance coverage. If you're thinking inflation could potentially erode the value of your insurance benefits, you're right on the money. Inflation can significantly impact your insurance coverage, but how exactly does this happen? Let's delve deeper. Imagine having an insurance policy in a stable economic environment. Picture this: you're a homeowner with home insurance that covers the full cost of repairs. A storm hits, damaging your roof, but you're not worried. Your insurance policy has got you covered. The premiums are affordable and you can easily manage them within your budget. The coverage is sufficient, ensuring that you can restore your home to its former glory without breaking the bank. Now, envision yourself with health insurance. You become ill and need medical treatment. Again, you're not concerned. Your insurance policy is there to cover your medical expenses. You can receive the care you need without incurring enormous out-of-pocket costs. This is the beauty of insurance in an economy with stable prices. It provides reliable financial protection against unforeseen circumstances without causing undue financial stress. In a stable economy, insurance works as intended. But what happens when inflation enters the picture? Now, visualize that same insurance policy in an inflation-ridden economy. As inflation rises, it subtly chips away at the value of your insurance coverage. Think of it this way: you've got a policy that covers a set amount for a particular service. But when prices inflate, that same set amount doesn't stretch as far. Consider a homeowner's policy, for example. It might pay up to a certain limit for repairs, but if the cost of materials and labor rises due to inflation, that limit might not cover the full cost anymore. You'd have to pay the difference out of pocket. The same goes for health insurance. If the cost of medical procedures and medications increases faster than the coverage limit, you could find yourself footing a larger portion of the bill. Meanwhile, your premiums might also rise, reflecting the inflated costs, but without a corresponding increase in coverage. Inflation can turn what was once sufficient coverage into a policy that falls short of your needs. Inflation and insurance coverage, two concepts that are more intertwined than you might initially think. We've journeyed through the influence of inflation on insurance, seeing how rising costs can chip away at the value of your coverage. It's crucial to remember that as prices inflate, the protection your insurance offers can deflate, leaving you vulnerable to risks. Inflation is a silent threat to your insurance coverage, and understanding its impact is the first step in protecting yourself.